Well, that's right. First of all, I think the most amount of stimulus that has been pushed through has really been on monetary policy, and that's had an impact. However, fiscal stimulus hasn't yet being brought through to the real economy. So I think even if stimulus or further stimulus is put in place, I don't think that will have any impact, because it's a channeling of the stimulus into the real economy that's been the problem.
Jinny, we've seen this horrendous situation for pork producers in China. I mean, it's been really devastating for the industry, the swine flu story as well. And I'm just looking at the latest inflation data out of China, and actually still higher, of course, as you would expect on the pork prices, but actually incredible volatility on vegetables and eggs. And we've seen fruit prices being moving up as well. And this has made me think about how China is sourcing its resources, now whether they be softs like we were just talking about there, or whether it be harder resources as well. And I was thinking about the volatility in the softs, and whether actually we could start seeing that in the other side of the economy, in the basic resources, in products that are needed to keep driving the Chinese economy as well. Are we going to see more volatility on some of those inputs going into the Chinese economy going forward?
And you're right, I think it is definitely the fruits actually in the most recent months' data that has been driving up the volatility. And those supply side shocks are very seasonal, and obviously what we're seeing is there may be some temporary effects on these supply side shocks. Yes, you're right, I think diversification and long-term imports from other countries, etc. And this is why China's Belt and Road Initiative, for example, comes into play, particularly as we're talking about energy and other types of resources. But I think for China, CPI, so basic inflation, is very much food-driven still. 20 to 30% of the basket is very much a food-based. If you look at the non-food, that has been very stable.
Yes, it has.
So in fact, the inflationary picture in China is still very, very stable.
This is a key point. It's been stable, and despite the concerns about the trans-Pacific issues between the US and China as well. So that is actually remarkable stability, despite, again, huge tariffs going on both sides in that trading relationship.
Well, exactly, and as I've stressed previously, the impact really on both economies is really about uncertainty. So it's impacting on investment decisions and consumption decisions, rather than these things such as inflation and other factors.
Some questions in the market about how much more stimulus China could bring to the table this year, how much it needs to bring, how much it actually will produce, given it's got Belt and Road in the backdrop as well. Trade resolution could happen potentially at any given point. What do you think the script will look like for Chinese authorities for stimulating the economy for the rest of this year?
Well, I think actually there is more pressure on the authorities not to stimulate too much more, because as I've said, tax, easing of tax, fiscal policy is already being pushed out. It's about the implementation of these policies. And in fact, overstimulating the economy is bad, because what you produce is financial risks, credit produced through the banking sector. So it's really about balancing how much credit is pumped into the private sector, the SMEs, for example, and also how to really control, particularly wage growth and how consumption can be maintained.
Fabulous. Look.